Good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, midweek blues, we are bracing for that. But hopefully after the kind of sell-off we saw yesterday on Nifty expiry day, hopefully we would see some semblance of green on the screen. Let's hope so. And we would be looking forward to some midweek excitement instead of midweek blues today. But global cues aren't looking all that supportive. Asian markets were fairly mixed. There was some trade data that came out of Japan that was above expectations, and investors were passing through that. But overnight on Wall Street, we had the November jobs data, mixed signals coming out of there, which is why we saw a mixed close on Wall Street as well. S&P and Dow clocked in their third straight day of losses, but the Nasdaq managed to eke out some gains. Of course, the Nasdaq has also been under pressure in recent times. Due to sell-off in AI stocks. But yesterday, the Nasdaq managed to end the day in the green. GIFT Nifty was, giving slightly negative hints, but in the pre-open at 9 o'clock, things were looking pretty good on the screen. But right now, as we speak, the Nifty is up somewhere around 20 points in the pre-open, and the Sensex is down somewhere around 68 points. So all in all, we are looking at a flat start, but let's see which way, the Nifty really swings, whether it's in the positive zone or the negative zone. Of course, we'll find out at 9:15 in the morning. In fact, 9:15, just some minutes away from now. In terms of, the stocks, quite a few of them to watch out for. Gas stocks will be in focus. PNGRB has notified the new, of course, tariff. So that's something that we will watch out for. Insurance bill has, got the approval in Lok Sabha as well. So insurance stocks once again in focus with some block deals. Ola Electric as well in focus after Bhavish Aggarwal sold somewhere around 2% stake via bulk deals. So yes, lots to watch out for. We also have that all-important SEBI board meet today. We'll take stock of what's on the agenda, and your stock-related queries will also be in focus. So keep them coming in. We'll try and get them addressed. But before all that, quickly take a look at the top stories at this hour. Wall Street ends lower as the November jobs report paints a weak picture of the US economy. The Dow slips 300 points while the S&P was down 0.25%. Asian markets were mixed while the GIFT Nifty suggesting a lower start. In the pre-open at least, we are seeing some green ticks on the screen. Oil prices rise after US President Donald Trump ordered a blockade of all sanctioned oil tankers going into and out of Venezuela, while gold inches up as US employment rate rises in November, reinforcing bets of rate cuts by the US Fed. The insurance amendment bill clears the Lok Sabha hurdle. Finance Minister Nirmala Sitharaman says the country needs insurance to be more accessible, and enhancing FDI limit to 100% will enable global insurance to inject substantial capital directly. The Petroleum and Natural Gas Regulatory Board has rationalized the unified tariff structure for natural gas transportation to encourage wider adoption of CNG and PNG effective 1st January 2026. Under the revised framework, PNGRB has reduced the number of tariff zones from 3 to 2, that is up to 300 kilometers and beyond 300 kilometers. All right, yesterday wasn't such a great day for the market. We saw all-round weakness. Rupee, of course, made a record low of 91.8. So yes, that was another record low, 08. But of course, this morning as well, we are around that level on the currency. So it's the pace of the fall that has kind of dented sentiment on Dalal Street. If you look at the broader end of the markets, pain there as well. In fact, the Nifty Mid-Cap Index ended lower by about 2% or so. The headline index itself broke below that 25,900 mark as well. Of course, currency, let's see how it has, really, it is trading right now. But yes, it was around that, yes, 91.04. That's where it's at. 91.08, that's the record low. Hovering around that level itself. In the last 5 sessions, the currency is down almost 1%. Quite a few movers yesterday, the likes of PB Fintech, Axis Bank, etc. Vedanta as well, of course, last half an hour was crucial given the fact that it got the NCLT nod for the demerger plan. It rebounded 5% from the day's low. In fact, managed to hit a fresh 52-week high as well. Lots of other stocks were also in focus. But today, two new listings, Park MediWorld and Nephrocare Health. These two counters will be listing at 10 a.m. So we'll be keeping an eye out on that as well. In terms of fund flows, foreign investors were net sellers to the tune of 2,381 crore rupees. DI net buying continues. They bought shares worth 1,000 crore rupees in the cash market. Put call ratio meanwhile dropped to 0.9 vis-a-vis 1.18 in the previous session. One stock remains in the F&O ban, and that's Bandhan Bank. But let's understand what the texture of the market is looking like after yesterday's sell-off, whether it was an expiry-related sell-off and whether we will see some green ticks today or not. Let's ask Ruchit Jain, VP Technical Research at Motilal Oswal Financial Services. Ruchit, always a pleasure chatting with you. 25,900 taken out on the downside. But how would you look at yesterday's move? Broader markets, of course, as we already know, have been under a fair bit of pressure. But on the headline level, do you say that the kind of correction we saw yesterday was mostly expiry related, and today we could see some bit of green on the screen? What are your thoughts?
Yeah, hi, very good morning, Nandita. Thank you for having me on your show. Well, I think broader markets have not been participating or have been an underperformer since the month of October itself. And the main reason beyond that overall underperformance, I believe, has been the INR depreciation. So INR has depreciated sharply over last these 2.5 months, which has led to this selling in the broader markets. And I think until we see a reversal coming in there, it's difficult to see any kind of no trend reversal or any kind of broader uptrend coming in the mid caps and the small cap space. But having said that, if you look at the Nifty index front, so Nifty index is not in a downtrend. It is holding its 50 DMA well. If we look at the recent correction, which was around that, around the 50 DMA, and the markets resumed that uptrend from 25,300. And after this, the last week's correction also, the markets halted around that 50 DMA, which is now around 25,700. So we believe that till that 25,700 is intact, there is nothing much to worry about on the index front. But yes, market breadth being 1:2 on the in the favor of declines yesterday is also not much good sign. So we are advising our clients also to only be very stock specific, because on the index front, the trend is not negative, but on the small caps front, the trend is not bullish as of yet. So, focusing more on the large cap names or such stocks which are showing outperformance in such a market, I think that remains the key for short term or positional trading. So for index, we would be watching out for that 25,700 immediate support in the short term. Till on the closing basis, we are about that. Nothing too much worry about on the index front. I think the broader trend for Nifty at least remains positive. But yes, very stock specific approach should be taken when it comes to trading.
Okay, take stock specific approach, and as long as 25,700 holds on a closing basis, nothing really to worry about, at least on the headline index front. Talk about the Nifty Bank Index as well, managed to hold on to that 59,000 level. Here the setup is positive, and what are the next targets to watch out for? Would 60,000 work as a near-term target?
So if you look at this entire month of December, in the first half of December, the index has seen more of a time-wise correction or consolidation. 60,000, 60,100 has been the resistance, and in last 15 days, 58,800 has acted as a support. So 1,100 points range is there, within which a time-wise correction is there. So 58,800 is a crucial support to watch out for as far as Bank Nifty is concerned. And on the higher side, 59,500 would be the initial hurdle. If that is taken out, then again that higher end of the range, which is around 60,000, that can be seen. But more or less, the very immediate trend for Bank Nifty remains sideways or consolidation.
Okay, sideways or consolidation mode. That's how the Nifty Bank setup is looking like. Before we move on to other pockets, want to talk about Axis Bank. What would you be doing with the stock after the kind of move it saw yesterday? Is it a buy, or would you look at some other private banking names?
So I think one should keep a wait and watch approach, because yesterday's sell-off was supported by high volumes, and whenever we see such high volume-based selling, the stock could tend to see some more correction or at least a consolidation. The major long-term support for the stock is coming around 1170, 1180 kind of range. So one can wait for further declines towards that 1170, 1180. If it comes over there, then the risk-reward ratio might become favorable. But at current levels, I think it's not a trade over there. So better to keep a wait and watch approach and review it when it comes, or if it comes around 1170.
Okay, that's about Axis Bank. But just about 3 minutes to go. Share your recommendations for this morning with our viewers, please.
Yeah, so on the long side, we are recommending Titan. As I said, we are looking for such stocks which are showing strength in such markets where the broader markets are negative. And Titan is one such stocks where overall trend is looking quite bullish. A higher top, higher bottom structure has been there. On any declines, we are not witnessing any volume-based selling happening. Whereas when the prices are going up, the volumes are increasing. Yesterday, again, the stock witnessed and price up more with good volumes. The 50 DMA has acted as a support. So Titan can be bought at current levels, no for short-term trading, and one can keep a stop loss below 3,840 on the existing long position. They expect target somewhere around 4,080 to 4,100. And one can even trade on the short side. Jubilant Food is one stock which we have recommended to go short. A consistent underperformer, a low top, low bottom structure has been seen, and yesterday the stock closed around its 52-week low itself. So this is just a sign of a continuation of the downtrend. So on the future segment, one can go short on Jubilant Food with stop loss above 582 and expect targets in the range of 540 to 535.
All right, those were the recommendations from Ruchit. Ruchit, another pocket that will be in focus, would be the gas companies. PNGRB has, revised natural gas transportation tariff to boost CNG and domestic PNG usage, right? One nation, one grid, one tariff. That's been introduced for CNG and PNG consumers nationwide. Of course, the tariff zones have been reduced from 3 to 2 up to 300 kilometers and beyond 300 kilometers. I think there's a upgrade that has come in for IGL as well from Nomura. This morning, I think they have upgraded the stock to buy, and the target price is at 230 rupees or thereabouts. In the pre-open, at least I can see good traction on some of these stocks. As a result of this, this change in tariff structure and of course this upgrade that has come in on IGL, how would you look at this basket, and which one would you prefer, IGL, MGL or Gujarat Gas?
So far, all the three names have seen a decent price-wise correction over last few months. So even IGL, if you see, then it started correcting from the 220 to 25 zone, and it has seen some correction towards 180. So the momentum readings are a bit oversold. So based on these news flows, if we see some positivity, then there could be some pullback move. But whether this should bottom out and see a significant uptrend, that is too early to take a call. So I think post that initial positive reaction today, the follow-up move would be very important to see. So I would keep a wait and watch at least for today's closing of our next 1 or 2 trading session where the follow buying is also there, because many times it happens that positive news flows comes and the stock opens gap up, but there is no follow up move. So one can take decision in next 1 or 2 days.
Okay, wait and watch approach when it comes to IGL, MGL, and whether or not follow through buying comes in or not, that's crucial. But take stock of the market open. We did open with green ticks, and now we are oscillating between gains and losses. Very, very flat open, 25,850. We are holding on to that level, but we are still below that 25,900 level. Let's see whether or not we could see more buying coming in as we go through the day. Sensex right now extremely flat, up 8 odd points. The mid cap index, that's continuing its downward move. That's down almost 0.2%, and mixed open as of now. But the advanced decline ratio is even Stevens, 1:1, 1,008 advances to 1,013 decline. So it's very cut to cut. Let's see which way the breadth of the market as well moves, because it has been on the negative side for quite some time, barring one or 2 days. But in terms of sectors as well, the Nifty Bank Index has started on the back foot. But let's see which are the other sectors that are taking the lead at the current juncture. Yesterday, most of the sectors ended the day in the red. PSU banks, realty, IT. These were some of the pockets that saw considerable amount of sell-off. But this morning as well, the Nifty Bank, as we speak, has edged back into the green. But in terms of other sectors, just want to bring up that map. Yes, metals are gaining, and that's because dollar index has cooled off for a second day on the trot. In fact, it's around that 98 handle. I think that's come as a positive for the metal index, which is taking the lead at the current juncture. PSU banks also seeing good traction, up 0.3%. Real estate, that was really beaten down yesterday. That's seeing some amount of green on the screen on that index. IT as well, some bit of green there. What's not doing well? Banks, of course, in the red. FMCG, marginal cuts. So all in all, a mixed picture, but no sector is taking a clear lead, barring the metal pack. And in terms of the individual movers then, take a look at some of the stocks that are doing well. Shriram Finance, that's up 2%. Aisha Motors, Hindalco, Eternal, that was beaten down yesterday. That stock was down almost 4% yesterday. Today, some buying coming in. Remember, the sources say that Zepto may launch its IPO, or may in fact, look at launching its IPO in December itself. I think that's come in as some bit of negative news for the likes of Swiggy and Eternal. Competition blues there. So both the counters ended lower yesterday. SBI, among the stocks that are gaining today, Hindalco, JSW Steel, some of these metal names, some of the IT names like TCS also doing well. And Tata Consumer, that stock has been doing well off late, and today as well, it's among the gainers. M&M is the other one, apart from Maruti, that's on the gainers list. Among the top laggards, we have these banking names. ICICI Bank, that's the top Nifty laggard. HDFC Bank also on the losers list. Trent was seeing some buying in the last couple of sessions, but once again it has succumbed to some selling pressure. Max Healthcare, HDFC Life, these are some of the insurance names not doing well. Nestle India also in the red, and so is Bajaj Auto. Talk about Zomato or Eternal, so to say. Yesterday it was down 5%. Of course, there was a UBS note as well, which said that it has ceded some market share to Swiggy when it comes to food delivery. And that was another trigger for Zomato. But how would you look at Eternal? It has seen a fair bit of correction, and we have the stock gaining one off someday or the other. But sub 300, what would you do with the stock?
I think one can look to buy more from a medium-term perspective in a staggered manner. We have seen some price-based correction from the recent highs of around 350, 360. The stock is now hovering around its 200-day exponential moving average, which usually acts as a good support when we see such corrections where the stocks are in a longer-term uptrend. So can be bought at current levels, but I won't advise to go and buy 100% of one wants to buy. Maybe a staggered manner buying for the portfolio could be a good approach for it.
Okay, staggered buying when it comes to Zomato, that's recommended. But let's talk about some of the newsmakers then. Indian Overseas Bank, that's in focus. That stock is down 3%. Government is divesting up to 3% stake via the offer for sale route, 2% equity with a green shoe option of 1%. Of course, the offer for sale is open for non-retail investors today, and it will open for retail investors tomorrow. The floor price is set at 34 rupees a share. Of course, the stock is down somewhere around 3% or so. Given the supply, pressure, do you expect levels of 30 to be broken down anytime soon? Because the stock has been under pressure. If you see the last 1 month chart, it has given up or shaved off somewhere around 12%. More weakness, and what is the support that you'll be watching out for here?
Yes, in fact, the stock has been an underperformer even when the entire in this entire PSU banks uptrend which we have recently seen. If any stock which is not performing when the sector is going up, that definitely is a sign of worry. And now it's just indicating a continuation of the downtrend. The previous swing low in April 2025 was somewhere around 33.50, and that remains an important support as of now. But overall, being an underperformer, I think the trend still remains on the negative side only.
Okay, the trend remains on the negative side for an IOB. But, we have a query on a banking name. Just want to get it addressed here itself. Mr. N.V. Harikrishna has written in, and he says that he is holding Canara Bank. And, of course, he is still in profit. Wants to know whether he should hold on or he should book profits. Hasn't really mentioned his position, how many shares or at what rate he bought, but he's making a profit. Should he hang on to it, or is it time to book partial profits?
Well, broader trend is still positive for Canara Bank. In the recent uptrend, we have seen a good leadership taking coming in from stocks such as SBI and Canara Bank. And even in this correction, we are not witnessing any kind of trend reversal on the mid to long term charts. The major support for the stock is around 140, 139. So until that is intact, nothing much to worry about. There's a small bit of corrections because the stock has already seen a rally from 100 to 140, 150. So some consolidation or a time-wise correction, I think, could be there because the overbought momentum setups are getting cooled off, but no signs of trend reversal. So once this time-wise correction or consolidation is over, then you can expect a recent resumption of the uptrend. So I think you should continue to hold on to existing longs.
Okay, hold on to your position. That's the view. But before we move on to other queries, want to get in your thoughts on Akzo Nobel. Imperial Chemical may sell 9% stake via a block deal worth almost 1,300 crore rupees. The stock has been under pressure today as well. It's down quite a bit, of course. If you look at the floor price, that's at 3,150 per share. That's a 13% discount to yesterday's close price. Given the kind of pressure that stock has seen, if you look at the long-term charts, 6 month, longer period charts, 6 months, 1 month, hasn't really been able to pick up, so to say. But how would you look at the stock now, especially given the fact that it's in news and it's trading with cuts of almost 14%? Has there been a fresh breakdown on the charts? How would you look at it?
So broadly, if you look at the positional charts also, then since last 12 months, the stock is still into a consolidation phase. In November 2024, I think the stock price was trading somewhere around 3,800. From there, 3,800 to 3,000, this has been the trading range. The stock twice corrected towards the 3,000 mark. Again, in this up move, the stock registered high of 3,800 in the month of January as well as in the month of July. But no, it was not able to surpass that level. Even recently, when no, many of their paint stocks rallied when Asian Paints went up. The stock made a high of around 3,750. So you can clearly see that 3,750, 3,800 has been acting as a resistance for the stock since last 1 year, whereas support is seen around 3,000 mark. So I think this broad consolidation phase still continues for Akzo Nobel. So unless we see stocks surpassing those highs, the broader trend is still not positive. And post the gap down opening, I think it makes sense to keep a wait and watch approach and not to be in a hurry to do any kind of bottom fishing here.
Okay, don't do any kind of bottom fishing for an Akzo Nobel. That's the view. But let's shift focus and get more queries addressed. Sameer Nayak has written in, wants to know your thoughts on DOM Industries for a fresh entry. Of course, the stock has been consolidating, so to say. Last 1 month, we've seen cuts of 2%. Stock is hovering around that 25.50 mark. Is it worth looking at right now?
So still sideways, I believe. Majorly 2,300, 2,400 is a support zone for the stock. So if it comes over there, then the risk reward ratio could become favorable to take some contra trades. So 2,400, if we get any dip towards that level, then keep a buy and dip approach for this over there.
Okay, a buy on dips approach. Hope that answers your query. But next query then, this one's coming in from Vaibhav. Wants to know your thoughts on Cupid. He's holding on. In fact, he has holdings in the stock and he's making profits. Wants to know whether he should add more, book profits, or hold on to it. What is the thought? Stock has shown good traction in the last 5 days, and last 1 month it has been quite a high flyer, up 40%.
So in fact, if you see since the month of April itself, I think last 7-8 months, the stock was trading around somewhere around 55 to 60. From just 55 to 60, we have seen 420, 430 levels now. So it has been a vertical one-side rally irrespective of what is happening in the market. Momentum readings are a bit overbought, so won't advise to create any fresh more positions over here. But you can look to book partial profits because of this recent run-up move, which has already happened in the stock. So on your existing portion, I would suggest you can do partial profit booking, and on partial positions, keep some trailing stop losses on rest of the positions.
Right, it's been a multi-bagger on a 6-month basis as well, as you rightly mentioned, a vertical move in the share prices of Cupid. Hope that answers your query. Next query from Alex on Concor for long-term investment. Is it opportune? Is it an opportune buy? And how would you look at it? Because Concor, along with other railway stocks, have not really been in traction. Look at the last 6 months; it has shaved off 17-18%. Would it continue to consolidate here on? And for the long term, at least, is it a good time to pick it up at these levels?
So the theme itself has not seen any kind of buying interest of late. So I think unless we see any sectoral buying interest coming in, the overall momentum looks missing. And even recently, when the markets had rallied in last few months, the participation has not been there from the railway stocks or even from the Concor if you see. So when the markets were going up, if the stock is not participating or the sector itself is not participating, better to wait for some buying interest to come in for any kind of relative outperformance going ahead.
Okay, wait for the momentum to return to the sector itself. Of course, the sector has not really picked up steam after the corrective phase. But next query from Naveen on NBCC. The stock is, stock has seen a fairly good move in the last 5 days. How should one approach this stock? Would you say that after the cuts it has seen in recent times, uh, the renewed traction that it saw in the last 5 days would stick? And should one look at this stock at all?
So the immediate very short-term trend for the stock is sideways with 105, 106 being a good support for the stock. But I think from a bit mid-term perspective, this consolidation offers a good opportunity to accumulate. If one is looking from next 4 to 6 months of perspective. So at current levels, one can initiate some buying and with a room to average if the stock sees some decline towards 105, 106.
Okay, sideways moves expected on NBCC, at least in the very short term. But let's talk about the other, the next query. CK, I think it's Satya CK, who's written in, wants to know your thoughts on whether Glenmark is a better chart for the medium term or Gland Pharma. What would your choice be among the two, Ruchit?
So Glenmark definitely being an outperformer, relative outperformer within both the names, offers a good chart structure from a midterm perspective. And even the recent correction, the 200 DMA, which is around 1800, 1750, had acted as a good support. So the price-wise downside seems to be limited over there. So Glenmark, of course, can be preferred on any kind of declines.
Okay, prefer Glenmark on declines. Hope that answers your query. There's a query that's come in on an Exide from Ranjit. Wants to know the short-term view. Today, of course, the stock is down, hasn't really picked up steam. Last 1 month or so, it has shaved off 5%. I think, it hasn't really picked up speed, so to say, and it has been in reverse gear. Exide, how does the short-term movement look like going forward? Do you expect consolidation to continue here?
Yes, overall an underperformer within the auto ancillary space. No signs of strength yet coming in. The volumes are also not that high when we are witnessing in between pullback moves. Major support on the bit mid to long term charts is coming around 330 kind of levels. The stock is still about 10% away from those levels. Wait for some declines towards 330, where if the stock comes over there, then the risk reward ratio would become favorable to take contra longs there.
Okay, that's about Exide. I hope that answers your query. There's a query that's come in on an Epack durable. Wants to know this. I mean, I'm not getting his name. He wants to know whether the stock has bottomed out, and should one take positions in the stock. The stock has seen good recovery in the last 5 days. It is up 20%, but it's still coming off its 52-week lows. So, how would you look at it? Do you think it has bottomed out? Can it pick up even more steam from here?
Too early to take a call where the bottom has been done. But yes, the stock has seen a pullback move from its support to 50 was a good support for the stock. It made a low of around 245 and witnessed an up move from there. So downside could be limited for Epack durables from current levels. So already the stock has seen an up move in this week of about 20%. So if we get any kind of dip towards the 270, 280 again, then those could be good levels to buy the stock.
Okay, that's about Epack durables. But let's talk about some of the fertilizer names as well. The likes of Fact, they saw good traction yesterday. I think backed by solid volumes as well. Today, Fact is under some bit of profit taking. Given the volatile nature of the fertilizer pack, how should one approach it now? And any names that stand out? Fact, Chambal, National Fertilizer, anything that that's on your list?
In this entire space, UPL is only one stock which we like technically. Overall, we have seen some pullback in couple of names off late, but no, we have not seen any kind of consistent uptrend coming in stocks such as Fact, Chambal, which have seen some consolidation or underperformance. So UPL is one stock where one can take long positions from a positional perspective.
Okay, UPL looking good from that pocket. But let's talk about another newsmaker, Saregama. It has approved the acquisition of Bhansali Productions, and it will be, of course, acquiring up to 51% stake by 2030. The stock is extremely flat, with a negative bias, but of course, it has seen a fair bit of, it has been in a fair bit of downtrend as well. So, how would you approach this stock? Would you expect it to remain in this level? It's very close to 52-week lows. Do you expect that level of 340 as well to be? Okay, I think we've lost the connection with Ruchit. So let's see let's see if we can re-establish the connection or not. But in the meantime, markets have picked up traction. Look at the Nifty; it has crossed that 25,900 mark. So yes, there will be some reprieve after yesterday's sell-off. 25,900 back on the charts, some bit of green on the screen. Sensex up almost 200 points. The mid-cap index has also turned the corner for now. It's up almost 2/10%. So yes, some bit of buying coming in after yesterday's selling. And the bank Nifty, as I had already mentioned, it had already edged back into the green. But right now, good to see that we are picking up steam after the bout of sell-off that we saw in the market over the last 2 days or so. In terms of the individual movers, Shriram Finance, there's a board meet later this week where they will be of course deciding on the Japanese partner. The stock is on an upward trajectory. The stock is up 2.5%. Eternal, that's a close second, up almost 2%. SBI, Eicher Motors, Tata Motors, some of these auto names doing well. Bajaj Finance, Hindalco are on the gainers list as well. So as of now, midweek blues, and let's hope things continue this way and we end the day in the green as well. But on that note, I don't think we are being able to establish connection with Ruchit, but we have Mayuresh Joshi with us, Director Research at marketsmithindia.com. Mayuresh, great to be chatting with you this morning. Always a pleasure. I want to first get in your thoughts on how the rupee has behaved. Perhaps that's another factor that contributed to the kind of sell-off we saw in the market yesterday. How are you expecting the markets to behave here on? FPI flows, of course, they are not coming back as of now, it seems. Rupee has, of course, taken a turn for the worst. At this point in time, when one is looking forward to a Santa rally, what does it look like? Do you think this time Santa is not going to really make an appearance? Or do you think that despite the sell-off that we saw and the moves that we saw, next week we could see Santa rally actually taking shape? What are your thoughts?
Good morning, Nandita. I think that's the hope that the markets are living with. And again, I think it's been a torrid time. Last 12 to 15 months have been tough for Indian equity markets, and we have underperformed the emerging markets significantly. Add to that, the kind of FPI stroke FDI outflows that you're probably witnessing in the Indian markets is creating the pressure on the rupee as we speak. But in my opinion, again, I think RBI has not intervened for two reasons. One, I think it's a little bit more comfortable in terms of the quality of flows that are probably going back. They're probably not coming off from more sensitive sectors as we speak. And the second element in terms of letting the rupee find its own natural level in the aftermath of what probably happens in terms of trade tariffs obviously helps and aids our overall export buoyancy in terms of reported revenues and constricts the trade deficit to a certain extent. So I think I'm pretty sure RBI will be on the watch out and they will intervene as time comes. But for the Santa rally itself, I think it's really surprising because how Q2 earnings have probably played out have been very, very positive for India Inc. And the expectation now largely getting built in, Nandita, over the next 2 years is that as a base case scenario, at least a 14-15% earnings growth. So I think it's more adjustment, in my opinion, a year-end adjustment that is probably happening. The hope is that as Q3 numbers come out and as they are relatively better off, which is the base case scenario, I think the return of FPIs, FIIs, FDI will probably come about. So I think it's just a matter of time and perspective that one needs to see.
All right, just a matter of time when FPIs come flocking back to the Indian market. Let's hope so. But let's talk about some of the sectors that have been hogging the limelight. I want to talk about the insurance sector in particular. We've had that insurance amendment bill that was cleared by the Lok Sabha yesterday. I just want to ask you, how much of an enabler will this 100% FDI be for the sector, and what does it really mean for growth, competition? How are things going to pan out, and what does it really mean for the sector? Would it take a lot of time to pan out, or how are you looking at it? And when should investors actually expect any kind of flow through benefits? When it comes to numbers, etc. How are you analyzing the impact of this bill on the entire sector as a whole?
So, Nandita, I think two, three aspects. One, I think in terms of the 100% FDI, I think that's positive for the sector as a whole because it probably gets in more direct investment without any regulatory approvals on a fast track basis. The second element in terms of the underpenetration of the sector as a whole, whether you're talking about life and within life, whether you're talking about health, term plans that we're probably talking about, are still starkly underpenetrated compared to a lot of other emerging economies and developed economies. There is a solid story in terms of runaway growth that can come through. The third element in terms of the capping of commissions. Now, on what basis and in what aspect does this come through? Whether there's a slab-wise structure that comes through, or is it one fixed fee, or is it a deferred way in terms of the first-year commissions to be spread out over a longer periodicity of time? I think only time will tell as the regulator probably comes out with those aspects. But as they come about, I think the kind of impact that higher commissions probably had was twofold again. I think one, I think because of higher commissions, the kind of volumes that were coming through were relatively better. With lower commissions, does it disincentivize the individual investors or the individual agents and the bank assurance tie-ups as well to probably look at other products is something to be seen. The last aspect in terms of how much of health and term probably contributes in terms of individual players, how much of that is participating, non-participating. I think with all those aspects into account, I think you probably are seeing some element of stagnation in reported numbers that can come through unless you have absolute clarity on how this will probably play out. So I think a neutral view in terms of the sector is.
Okay, neutral view. All right, got your point. How are you looking at some of the names like Eternal? Why I'm asking you is that, of course, there are reports that Zepto may come out with an IPO in December itself. Of course, that would mean competition blues for the likes of Swiggy and Eternal. And Swiggy recently raised 10,000 crore rupees via QIP as well. And yesterday there was a UBS note that said that Eternal has ceded some market share in terms of food delivery to Swiggy. How are you looking at Swiggy at Zomato rather in the middle of all this? Do you think Swiggy or Zepto that would pose stiff competition to Blinkit, or do you think that the kind of position that Blinkit enjoys right now, it's in a good position, and all these competition blues are actually overstated? How are you looking at that dynamic playing out particularly for Eternal?
Those are two things, Nandita. Again, I think in terms of the setup that they've probably done for the business to be successful, both from a food delivery and a quick commerce perspective, dark stores and the positioning of dark stores is extremely critical in terms of their business operations. And that is what both Eternal, Zomato and Swiggy are probably doing over the last few quarters. They've accelerated the kind of cash that they've got on their balance sheet. They've raised capital to ensure that they have a fast track opening of these dark stores across a lot of cities and districts in India, which gives them the backbone in terms of the core operations that are probably required. Now, once they have established that, if any competition probably comes through as well, and we're talking about the bigger players, Zepto is already there in play. The only thing is that it will get listed at some point of time. Bigger competitors like an Amazon as an example, or a Reliance Retail as an example. We have been hearing about delivery. We have been hearing about DMart doing local operations as well. I think what really transpires for the bigger players is that they will need to create this ecosystem in place for their model to probably be hyper competitive compared to the existing players. Obviously, as they enter markets, there is going to be cutthroat pricing competition, which will have an impact. And therefore, I think as a space, Nandita, I think volumes might still continue growing at a good pace. But do volumes necessarily mean amidst competition, the risk in terms of pricing, that it will be a profitable amount of reflection coming on the bottom line in terms of absolute numbers being played on the top line? I think that is where I think a lot of analysts are probably deferring. And that is where I think that circumspect angle comes through on whether profitable and consistent profitable growth will come through. Obviously, valuations are elevated for these players speak. And therefore, I think it's become a catch-22 situation for the space as a whole.
Okay. Yes, and of course, so many options. Look at Meesho as well. Consumer tech
Yeah.
space. It has done so well post the IPO. So yes, lots of options, and now of course with Zepto also, making its D-Street debut pretty soon. Investors will be spoiled for choice, so to say. But let's talk about DMart from the consumption space as well. Yesterday there was a report from CLSA wherein they reiterated that it's a high conviction buy. In fact, the target price is at 6,300, 65% upside from current levels. On the other hand, I was reading a report from Goldman Sachs in the morning. More of a bear case. They've said that the earnings downgrade cycle would continue, and the target price is of course much lower. So it's a case of a bull. It's a case of a bull case versus bear case. Where would you stand on DMart, and what are your thoughts? Do you think free cash flow, of course, will get strong going forward as the expansion, the store expansion stabilizes? Which camp are you in?
So in my opinion, Nandita, I think the worst in terms of earnings downgrades is largely behind demand. And there are a couple of reasons to probably support and supplement that. One, I think with expectations of discretionary spending coming back, and specifically after the GST rationalization cuts, which have probably happened, will lead to better volumes. And as better volumes come through, we all know how DMart efficiently runs this model, own stores, the efficiency per square feet in terms of revenues, operating costs. Are skewed in favor of better numbers coming through. And if better numbers start coming through, that operating efficiencies will kick in for DMart. The new store openings in a calibrated way that DMart is probably doing, the quick DMart stores that they probably opened, what we are hearing in terms of even the delivery options that DMart is probably coming out with, probably adds value overall. Again, from a product mix perspective as well, they've also got all products, I think FMCG, other FMCG apparel as well. And therefore, I think as spends improve, not just in urban cities, and with inflation under control, also, I think tier 2, tier 3 cities should also start gearing up for better numbers going forward. I think the worst in terms of earning downgrades are behind DMart, in my opinion. It has always remained an expensive stock, Nandita. There are no two ways about it. And therefore, I think as earnings stabilize, for all the factors mentioned here with, I don't see any structural downside for the stock. In fact, earnings should stabilize or improve going forward. So anybody holding DMart should continue.
Okay, should continue to hold. So more of a bull camp on a DMart. But last question really on Vedanta. It has finally got the nod for the demerger plan, NCLT nod. My question is, the stock has already rallied so much. Do you think this was already baked in, because investors would have thought that the approval would come through sooner or later? The stock, of course, is at 52-week highs as well. How are you looking at this development, and could there be any hurdles to this demerger plan still, despite the fact that it has already got the NCLT nod?
I mean, if there are any regulatory hurdles or legal hurdles, I think very difficult to say at this juncture. But it seems that with the nod coming through, I think the process should get initiated. And if there are no other impediments that probably happen over the next few weeks and months as this process is rolled out, I think there is sufficient evidence to probably state that a lot of these demerged entities individually, looking at how the commodity cycle is probably getting played out at this juncture, demand supply dynamics, expectations of global demand slowly coming back as we head into the second half of the next year, will supplement that. Numbers will probably hold out for most of their individual businesses that they're getting into, and there is sufficient amount of value unlock that probably still is on the card. So there is sufficient space for Vedanta's price from a price action perspective to still probably have its say. So I think there is sufficient room for the price to still appreciate it now.
All right, sufficient room for the price to still appreciate. A lot of these brokerages are coming out with notes wherein they feel that Nifty could be at 29,000 by next year, and some have also predicted above 30,000. What are your own thoughts, and what do you think? Do you think large caps will take the lead next year, given the fact that broader markets are still navigating a lot of pain? So how are you looking at how things will pan out in terms of mid cap, small cap, target levels on the Nifty? Since we are at the fag end of the year, pertinent question to ask.
Oh, absolutely. So if you probably look at EPS estimates, and as I mentioned in my opening remarks, I think if earnings are expected to grow as a base case consensus between 12 and 14% over the next couple of years, I think the Nifty EPS of what you're looking at an FY27 exit, Nandita, and if you take a base case scenario of a 12% earnings growth, with an average multiple, Nifty has always traded in that average multiples of 16 to 23 times. So 16 at the lower end, 23 at the higher end of the range. If you take an average multiple of 18 and a half, 19 times, and then consensus upgrade with 12 to 14% earnings growth on an FY27 exit, I think the base case scenario for Nifty turns out to be 29,400 odd levels. The bull case scenario, if earnings growth exceed 12 odd percent, as I have as I probably mentioned right now, at 13.5%, with a 19 and a half, or even a 20 multiple going forward with better earnings, it might actually cap out 31,000 as well. On the lower side, in terms of a bear case scenario, if earnings do not play out and if earnings grow at 9.5 or 10%, which is improbable if they do play out on the negative side, and the lower multiple as well, I think Nifty might not reach 24,800 to 25,000.
Oh, okay. Quite a few, quite a wide divergence, so to say. But the next trigger, in terms of, the market, what would you say US India deal? That would be the next, trigger for the market, given the fact that everybody was anticipating that the deal would come through by end of 2025. But we had the CEA the other day said that, okay, things are in place, but expect a deal by March. So, 3 more months delay. How would, you look at that?
So something will come out and in the end, Nandita. So I think it is getting delayed, it is getting deferred. But let's look at the events that are now going to transpire as we head into the next year. You've got the budget to look out for. Key announcements in the budget will be watched out by the markets. Again, RBI has been extremely supportive from a central banker perspective. And obviously earnings, where earnings are expected to remain strong and stable. So there are a lot of positives that I'm looking forward for. And that probably brings us, as I said, as the base case scenario, that there is sufficient room for Nifty to probably have on its upside, remain optimistic on the markets. And I think the market rally going forward also will be led by a mix of large caps and mid caps.
Sure. Okay, got your point. With that, Mayuresh, would like to thank you for taking out time and sharing your thoughts with us. But, of course, still some more time to go for the year to end. I'm sure I'll be meeting you before that. So I'm not wishing you Happy New Year just yet. Maybe after our next conversation. Thanks a lot for joining in.
Absolutely. Thank you. Always a pleasure to be on the show.
Thank you. Thank you. Well, that was Mayuresh Joshi with his thoughts on the market, which, by the way, is extremely volatile. We've given up all those gains. In fact, the Nifty is back below that 25,900 mark, just about oscillating in the between green and red right now. So we've shaved off all those gains that the sudden pop that we saw in the market. Mid cap index also almost on the verge of slipping into the red. The Nifty Bank index is down. I think 0.2%. I think it's the Nifty Bank index that's taken the most. Yes, it has tanked, quite a bit. 117 points down from the day's high. Yeah, 150 points down from the day's high. I think big names like ICICI Bank were on the laggards list. Yes, ICICI Bank down 1.5%. HDFC Bank also down 0.5%. Yesterday, of course, we had Axis Bank flagging off that their margin will bottom out either by the fourth quarter of FY26 or the first quarter of FY27. They had earlier said that the margin will bottom out by third quarter of FY26. That, of course, sent shares of Axis Bank down somewhere around 5% yesterday. Perhaps it's a margin concern for banks that's really playing out and weighing in. But if you look at Axis Bank per se, it is trading in the green, but it's, of course, come off the day's high. But it did see a 5% cut yesterday. But other banking names are, of course, featuring high on the laggards list. Let's see some of the other sectors then that are, not doing well at the current juncture. Well, real estate, banks, these are the two sectors that are not doing well. But PSU Bank index is doing extremely well. That index is up almost 1%. Canara Bank up 2%, Bank of India, SBI, PNB. So these are some of the counters that are lending strength to the PSU Bank index. IT as well, as the rupee remains, over that 91 level. We are seeing good traction in IT names, particularly the mid-cap ones. Persistent is up 1%, Coforge up 0.7%, Wipro as well up 0.5%. So yes, it's the mid-cap IT names that are doing well. Metals also, as I mentioned at the start, dollar index has cooled off slightly. So that's one thing that is doing well, the metal index. I want to see what HPBP IOC are doing, given the fact that crude prices saw quite a bit of a tumble overnight, wherein Brent was sub $60 level. OMCs are in the green, but they have also come off from the day's highs. But nevertheless, HPCL is trading with gains of 1% and BPCL as well, gaining somewhere around 0.7%. But yes, as of now, we have slipped into the red. Nifty around 25,850. Mid-cap index also in the red, and of course, the bank Nifty is in the red. The advance decline ratio is also skewed in favor of declines as we speak. 1248 advances to 1388 declines. But the rupee has strengthened quite a bit. It's at 90.2. It had opened at 91.04. So, the rupee has strengthened after a weakish open. 90.2, that's where the rupee is at. Well, with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Of course, stay tuned to Money Control for all your other news and updates. We'll see you in the markets at 3 p.m. So don't forget to tune in then. But till then, have a great day and, thank you for watching.